Kohl claims he has discovered Nvidia's secret partners and expects them to outperform Broadcom, which gained over 6,000%. I reveal all the secret partners in this video so you don't have to buy Keith's newsletter. No paid or proprietary information is given away here. It's all guesswork based on clues from Keith's publicly available sales presentation. There's lots of stocks to uncover, so we're just going to jump into things. Here's what Keith says about the first stock. Nvidia's secret partner number 1, the global leader in lithography. No need to hunt down any further clues. The machine here is made by ASML, and they have a monopoly on advanced lithography machines which are used in the creation of advanced semiconductors. Here's the top 5 things to know about this stock, and after I'll tell you if I'd buy. ASML holds a near monopoly in extreme ultraviolet lithography machines, controlling over 90% global market share in advanced semiconductor equipment. These machines are essential for producing chips at 3 nanometers and below nodes, critical technology enabling AI, high-performance computing, and advanced consumer devices. Each EUV machine represents a substantial capital investment at €200 million, $215 million, with current order backlogs extending into 2026. In 2024, ASML generated €27.6 billion in revenue, a significant increase from €21.2 billion in 2023, and posted a net income of €7.8 billion, maintaining a strong net margin of about 28%. Looking ahead, management is targeting annual revenues of €30 to €40 billion by 2025 and €44 to €60 billion by 2030, depending on broader industry trends. The company also offers a dividend yield of around 1% and regularly returns value to shareholders through a consistent share buyback program. ASML's strong financial trajectory demonstrates consistent growth in both revenue and profitability, supported by the critical nature of their technology in semiconductor manufacturing. ASML relies on a global supply network with over 5,000 suppliers, including critical partners such as Zeiss for optics and Trumpf for lasers. The company faces export restrictions from both the US and Dutch governments, which limit its ability to sell advanced equipment to China and have impacted 20 to 25% of its historical revenue. Additionally, ongoing geopolitical tensions between the US and China, as well as between the EU and Asia, create ongoing uncertainty around market access and could further affect customer concentration and future growth prospects. ASML's top 3 customers, TSMC, Samsung, and Intel, account for over 70% of its annual sales, highlighting significant customer concentration risk. The company's revenue is highly dependent on semiconductor capital expenditure cycles, meaning that demand can fluctuate sharply based on the industry's boom and bust dynamics. While recent growth has been driven by strong demand for AI, data center, and automotive chips, any future macroeconomic slowdown could lead to reduced orders and impact ASML's financial performance. ASML currently trades at a premium, with a forward P/E ratio of about 39 as of July 2025, reflecting high market expectations for continued growth and recognition of its strong competitive moat. While the company has no direct competitors in EUV technology, Nikon and Canon remain rivals in older DUV lithography segments. Investors should be mindful of risks, including a potential slowdown in chip demand, valuation compression, or the emergence of disruptive new technologies, all of which could affect share performance. Ultimately, ASML offers a unique investment opportunity as a key player in the semiconductor value chain, but its elevated valuation and exposure to industry cycles and geopolitical tensions warrant careful consideration. In the past, I've discouraged people from buying this stock simply because its price went too high during the AI mania. However, the stock price is down a lot from its highs, and I think it might be a good bet as long as you believe chip demand will stay high. Any slowdown in chip demand, though, and this stock won't do well. Here's the clues for the second stock. Nvidia's secret partner number 2, the leader in etching and deposition tools. One small company has been the most dominant maker of etching and deposition tools in America for over 55 years. It boasts a broad array of equipment designed to meet the various stages of GPU manufacturing, with over 8,000 patented devices. With increasing demand for GPUs, this company is poised to benefit greatly from Nvidia's success. According to Yahoo Finance, this firm is a big growth target. Its revenue skyrocketed from $17.2 billion to $26.5 billion over the last 4 years. This company is Applied Materials, and the ticker is AMAT. Here's the top 5 things to know about this stock. Applied Materials, founded in 1967 and headquartered in Santa Clara, California, is the world's largest supplier of semiconductor manufacturing equipment, specializing in vital etching and deposition processes. The company supplies all major chip foundries, including TSMC, Samsung, and Intel, and has built a strong portfolio of over 8,000 patents. In fiscal year 2024, Applied Materials generated $26.5 billion in revenue, a 54% increase from 2020, highlighting its financial strength and industry leadership. Its equipment is essential for producing the advanced chips that drive technology in AI processors, data centers, automotive electronics, and countless other devices. Applied Materials benefits from powerful growth drivers and expanding market opportunities. The ongoing AI and data center boom is fueling unprecedented demand for advanced GPUs and processors, with Applied's tools essential for manufacturing the cutting-edge chips used by companies like Nvidia and AMD. At the same time, the increasing use of semiconductors in vehicles and industrial applications is creating steady, diversified demand for the company's equipment. Beyond its core focus, Applied Materials is also expanding strategically into display and solar panel equipment markets, opening up new avenues for growth outside traditional semiconductor manufacturing. Applied Materials holds significant competitive advantages that help protect its industry leadership. The company invests nearly $3 billion each year in research and development, fueling ongoing innovation and next-generation solutions. With an extensive portfolio of more than 8,000 patents, Applied secures its technological edge and barriers to entry. It consistently ranks number 1 or number 2 in key process equipment markets, thanks in part to its deep integration with customer R&D programs. These close partnerships not only strengthen long-term relationships with major foundries, but also give Applied unique visibility into future technology needs. Applied Materials faces several key risks that investors should consider. The company's revenue is highly cyclical, rising and falling with the semiconductor industry's capital expenditure cycles, a reality demonstrated by the boom in 2022 to 2023, followed by softer demand in memory and some logic chips. Applied is also exposed to customer concentration risk, with its 3 largest clients, TSMC, Samsung, and Intel, making up over 40% of total sales, which means any slowdown or contract loss with these partners could significantly impact results. Additionally, ongoing US-China technology tensions and export controls present persistent uncertainty, as China accounts for about 25% of Applied's revenue in 2024. Applied Materials presents a compelling but balanced investment case. The stock currently trades at a forward PE of about 25, which is above its historical average but lower than the peak multiples seen during the 2021-22 AI rally, reflecting market optimism for ongoing growth tied to AI and foundry expansion. The company's financial strength is evident in its net cash position and $7.6 billion in operating cash flow for fiscal year 2024, as well as a consistent track record of shareholder returns through buybacks and dividends. Applied is well positioned to benefit from accelerating AI-driven semiconductor demand and the ongoing expansion of global chip manufacturing capacity. However, its cyclical industry dynamics mean that investment timing remains important, as downturns can temporarily pressure results. Applied Materials is a good company, but I don't think it's going to grow a lot in the future and will pass for that reason. Here's what Keith says about the third stock, Nvidia's secret partner number 3, the master of memory storage. I highlighted the crucial role of memory in a GPU, essential for storing data in electronic devices like your computer or smartphone. Memory stacks enable GPUs to handle multiple tasks efficiently without slowing down the device. One little-known company is supplying the memory stacks for tech giants like Nvidia. This firm has been at the forefront of microchip memory advancements for over 45 years. Designed for next-generation AI graphics, these memory stacks offer increased capacity, performance, and efficiency. They also provide up to 20% faster response times for tasks like text-to-image creation. And he continues and says, additionally, they consume 30% less power than rival offerings, making this company a pivotal player in advancing modern computing technologies. Recognizing its critical role in manufacturing GPUs, President Joe Biden awarded this company $6.1 billion through the U.S. CHIPS and Science Act. Bloomberg states that this company has clinched up to $13.6 billion total in U.S. grants for its memory stacks. With the extra support, this firm has already begun mass production of its memory stacks for use in Nvidia's latest GPUs. This has driven its revenue from $23.50 billion to $32.38 billion in just over a year. This is Micron, ticker MU. Here's the top 5 things to know about this company. Founded in 1978 and public since 1984, Micron stands as America's sole major memory chip manufacturer, specializing in DRAM, NAND flash, and SSDs that power everything from data centers to mobile devices. With headquarters in Boise, Idaho, and approximately 48,000 employees worldwide, Micron delivers critical components for AI, gaming, and enterprise applications through brands like Crucial and Ballistics. Micron delivered record financial performance in the most recent quarter, generating $9.3 billion in revenue, up 37% year over year and 15% from the previous quarter. Net income reached $1.89 billion, translating to $1.68 per diluted share, while free cash flow climbed to $1.95 billion, the highest level in 6 years. Q3 FY 2025 marked exceptional performance with a 39% gross margin, up 110 basis points QoQ, and $1.91 non-GAAP EPS, representing a remarkable 208% increase year over year. Annual trajectory shows sustained growth with trailing 12-month revenue reaching approximately $33.8 billion, 58% higher than the previous period. Micron's growth is being powered by explosive demand from AI and data center markets, with data center revenue more than doubling year over year. The DRAM segment brought in $7.1 billion, marking 51% growth, while HBM sales jumped 50% sequentially. Looking ahead, the company forecasts Q4 FY 2025 revenue of $10.7 billion and earnings per share of 2.50. Micron is also leading in technology, with its HBM3E12H chips offering 30% lower power consumption than competitors, and already being shipped in volume to major hyperscalers. Production of HBM4 is set to ramp in 2026, while a new cloud memory business unit is expanding strategic partnerships with Nvidia, AMD, and Google, further cementing Micron's role in powering next-generation AI systems. Micron has announced an unprecedented $150 billion investment to expand U.S. domestic fabrication capacity, along with a $50 billion commitment to R&D for next-generation memory technologies. The company is expanding its Boise and Manassas facilities and building a new megafab in New York. Despite heavy capital expenditures, $2.66 billion in Q3 and $3.09 billion in Q2, Micron continues to generate strong free cash flow, posting $1.95 billion in Q3 alone. These strategic investments align with the CHIPS Act and are designed to reduce geopolitical supply chain risks while strengthening Micron's technology leadership. Micron's market performance has been strong, with its share price up roughly 50% year-to-date and analysts raising price targets, such as Morgan Stanley moving from $135 to $155. Still, there is some caution among analysts about the stock's demanding valuation, especially as peak AI-related benefits could be nearing. The memory industry remains volatile, with pricing and demand closely tied to inventory cycles in computing, mobile, and enterprise segments. Micron also faces intense competition from Samsung and SK Hynix in both the DRAM and HBM markets. On top of that, ongoing geopolitical tensions, highlighted by China's 2023 ban on Micron products for state procurement, add another layer of uncertainty to the company's outlook. I like Micron a lot and think it's going to perform well in the foreseeable future. Here's what Keith says about the fourth stock. Nvidia's secret partner number 4, the chipmaker powering Nvidia's success. Last but not least is the company that uses all the tools provided by the previous 3 firms to assemble the entire GPU. Once assembled, it hands the finished product to Nvidia. Times magazine describes this chipmaker as the world's most important company that you've never heard of. Yahoo Finance calls it the backbone of AI. And according to the Wall Street Journal, this firm is required for rapid growth of artificial intelligence. In fact, this company manufactures 90% of the world's most advanced microchips. This is Taiwan Semiconductor and the ticker is TSM. Here are the top 5 things to know about this stock. TSMC has maintained its position as the world's largest pure-play semiconductor foundry since its founding in 1987, holding over 60% of the global market share in foundry services as of 2025. The company is the only manufacturer mass-producing 3-nanometer chips as of 2025, powering cutting-edge devices for customers such as Apple, Nvidia, AMD, and Qualcomm. TSMC's continued technological leadership is fueled by substantial investment in research and development, with $6.5 billion spent on R&D in 2024 alone, helping it stay ahead of competitors like Samsung and Intel. TSMC's customer base is highly concentrated, with Apple alone accounting for over 20% of the company's revenue and other major clients including Nvidia, AMD, and Qualcomm, which creates a notable dependency on a handful of key customers. Additionally, more than 90% of TSMC's fabrication capacity remains in Taiwan, leaving the company geographically exposed despite efforts to expand manufacturing abroad. This concentration is compounded by significant geopolitical risks as US-China tensions and China-Taiwan relations present ongoing challenges, placing TSMC at the center of technology export controls and regional political uncertainty. As of July 2025, TSMC trades at a forward PE of 21x, which is above its historical average but still lower than many major US tech peers. While the company boasts industry-leading margins and offers investors unique exposure to semiconductor innovation, its revenues remain sensitive to cyclical swings in consumer electronics demand, leading to periods of volatility despite ongoing efforts to diversify. TSMC also faces rising competition from Samsung and Intel, though it continues to hold a significant technological advantage. Importantly, the persistent geopolitical risk stemming from China-Taiwan tensions gives TSMC a unique risk profile compared to most semiconductor stocks, meaning investors must carefully balance the company's technological leadership with these broader uncertainties. TSMC is a lot like ASML. If you believe chip demand is going to grow, this is a good bet on that and will likely beat the market. A slowdown in chip demand will cause the stock to lose value though. And make sure to click the link in the description to get $50 off Alpha Picks. I reviewed over 100 stock picking services and this one is by far the best. And they don't do any scummy marketing tactics every other company engages in. So if you want to put yourself in the best position to make money with stocks, click the link in the description now.